Hey guys, this is a Bybit tutorial. If you want to get set up on Bybit and learn how to trade, how to get crypto on and off the platform, and how to set up the Bybit trading system for best results, this is the video for you. Check out the timestamps below in the video description. I'm going to teach you how to set up your security settings, how to get fiat currency on and off the platform and crypto as well. Then I'll show you step by step how to input orders on the platform for both the spot and futures trading markets. Bybit have also added what they call ByFi, which is a crypto staking and lending platform for passive income. So if you put some stable coins or Bitcoin, even Ethereum on there, you can earn some passive income on those as well. Bybit usually have sign-up offers or incentives for deposits as well. So I'll leave the link in the description below. You can click that to go through and see what those offers are when you sign up. Let's go through to the Bybit's screen then. So yeah, just click that link in the description. It will take you through to this page, and you can click start trading now to sign up for an account. You need an email, and that's it for right now. Bybit do not require KYC info, so one of the benefits there. You can see some of the trading competitions that they do and some of the bonuses that they might have for you. Just going through to essentially your main screen though. So what you'll want to do once you have your account set up is come up to the top and just click either assets or just go to your account. So assets, you can click any spot derivatives or ByFi. All goes through to the same thing, which is this page. So this is your main page where you can pretty much do everything. So we'll quickly go through this. The first one is your spot account right here. A spot account just means the cash settled account. So if you buy crypto in the spot market, that means you own it and you can withdraw it to your wallet or anywhere else. You can also flick through to the derivatives account, which is a little bit different. We'll go through derivatives and futures trading towards the end. But essentially what you do here is just put some US dollar tether on account or Bitcoin on account. And then you actually are able to borrow and leverage up your trading only for more advanced traders, in my opinion. So I'll teach you how to do it and you can decide whether it's for you. And then we have the ByFi account, which I said is the staking and lending platform. You can see I've got some money on here. I actually put this on today, so my yield and daily yields aren't showing anything. But essentially, this is where you lend out some crypto and earn a passive income on it. So if you buy some Bitcoin and you want to lend it out, you can do it all on one platform. The other thing that we need to know when setting up our account is coming to our settings pages. So come up right here and then click account and security. It's going to take you through to this page. And the thing that you need to set up, the thing that's important is Google two-factor authentication. So because there's no KYC info right here, obviously that means that if someone hacks into your account, they can transfer something out. So really important to set this up. I've got it enabled. Just click enable and then download Google Authenticator. It's the official Google app on your phone, and you will scan a QR code and then it will set up a 6-digit PIN that refreshes every 30 seconds. And that is the thing that you can use to log into your account, send crypto out. Really important to set that up just to have that security. But all in all, it's a very simple system. All of your assets will be in this main page, and then you can go to trading them, withdrawing them, and doing everything else from here. So we'll get onto that now. Bybit do let you buy cryptocurrency directly with a fiat currency. So if you have dollars or pounds or whatever for a card, you can actually do that on the system. So let's go over to buy crypto. This is how you get crypto on the platform. And what they do, you can see for me, I'm in Dubai, so they're using AED, but this is going to be different, right? You can choose many different currencies right here. And then what it does is basically buys cryptocurrency directly for you. The way that you do that is through a card. So one of the slight downsides here is that you're going to be paying a little more for using a card than you would for using a bank transfer. That's just the way it is. So what we can do here, for example, is just put an amount in, and then you can see I will receive BTC if you just want to buy Bitcoin directly, or ETH or USDT. So USDT is a US dollar stable coin. So if you just want USDT and that's safe in your account to go ahead and trade other cryptos, you can do that because Bybit offers many more other cryptos for trading other than Bitcoin and ETH. So what we can do is come and choose either Simplex or Paxful, just two different service providers. These are not Bybit. They're third-party providers that you'll need to go through. And you can see if I use Simplex right here, the amount inclusive of all transaction fees is how much you want to deposit, and then it will show you a unit price for the crypto. So let's just do USDT right here. So I know that I will get $100 deposited onto my account. Now what happens, you have to agree right here and then click continue. You'll actually go through to Simplex. Simplex is not Bybit, it's a third party. They're used across the industry, so trusted, and you can use your card to pay, and you'll have to pay a small fee to get that done as well. But that's how you get fiat currency on the system. How do you get cryptocurrency on the system? Come over to buy crypto. You can actually press deposit right here, and it's the same thing. So if you have cryptocurrency on a different platform, come over to coin. You can choose the coin that you want to deposit. So let's say BTC. Now what will happen is, I'm just going to acknowledge this right here. This is my deposit address. So if you want to deposit crypto onto the platform from another exchange or a wallet, come and basically do this. So go into your wallet, click withdraw, and it's going to ask you for a address that you send it to. This is the one right here, the QR code, or you can press copy and then paste that into the withdraw screen on whatever wallet that you have. If you want to withdraw cryptocurrency from Bybit, so you've traded it and you want to take that into maybe a wallet, a decentralized wallet, just come over to your accounts again, and then very simply come to withdraw right here. And then you can see the coin that you want to withdraw. You can withdraw all of these, of course, any that are supported on the platform. So we'll choose Bitcoin again. Make sure you choose the correct blockchain to send it over. Now, importantly, if you're using US dollar Tether, there's a couple of different chains that you can use. The first is Ethereum, which is going to have very high fees. The other is TRC20, which is Tron. So depending on what other exchange that you have, it may well support the Tron blockchain. And I would suggest using Tron to send US dollar Tether if both wallets accept Tron, because the fees are much lower. Go into your wallet, get the deposit address, click that here, click the amount that you want to withdraw to your wallet or other exchange account, click submit, and that will go through on the blockchain. You can see the terms and conditions on the right. Before I show you how to actually trade on the system, I just want to go over the fees very quickly. Bybit have incredibly low fees, to be honest. So on the derivative side, so if you want to trade futures and you want to leverage up, you can see the fees right here. So if you are a maker, that means if you put orders on the book away from the actual price, so you make prices and you can see your order on the book, you actually get a rebate. You actually get paid money to do that, which is pretty crazy. If you just go and use market orders, if you don't know what they are, I'll explain in a second, then you can, you see you're trading 0.075%, which is a very, very low fee, amongst the lowest in the industry. Coming down to spot trading, so if you want to actually buy actual crypto, then you can see the fees are around about 0.1%, which again is amongst the lowest in the industry. You can compare them, but as an example, Coinbase is 0.5%, so definitely lower than that. Fees are very low, and then we'll actually go through and trade right now. So we'll start off with spot trading. Bybit have actually introduced spot trading, which is great, which means you can buy and hold cryptocurrency. The way that you do that, come to your main page, your assets page, make sure you have some cash in here, and you can actually transfer in between accounts right here. So if you have some in your derivatives account, you want to transfer that over to your spot account, you can do that. But just literally come to trade spot now, or you can choose the actual coin that you want to trade right here. So for example, if I want to trade ETH, come over to the right hand side and click trade. That will take you through to the same screen. I'm just going to click on trade spot right now. You'll see it open up, and of course it defaults to Bitcoin US dollar Tether. Just as an overview of this screen, what you can see is the currency pair that you're trading right here. So USDT and Bitcoin are the supported trading pairs. So everything has to trade against those. So if you want to buy Bitcoin, trade it against US dollar Tether, you need some USDT on your account. If you want to trade Ethereum, it will also trade either against US dollar Tether, which is a normal trading pair, or if you have Bitcoin on your account, you can trade it against Bitcoin as well. ETH and XRP are supported. Usually we'll trade with US dollar Tether. So let's keep it simple. And yeah, we'll choose Bitcoin right here. So that's that. On the right hand side, you can see the current market price for this trading pair. So about 51,000. The 24-hour change, good to know. And then some other information that I don't really use, but you can see the highs and lows over the last 24 hours. Then you can use the standard screen, or you can use the advanced screen as well. The advanced screen actually uses trading view. So you can use a lot of trading view options right here if you click advanced. You can put indicators on there. We'll get onto that in a second. But just the standard view is fine for now. So we're using a candlestick chart right here, but you can change that to an area chart if you like, or whatever you're comfortable with. I use candles. They give me more information. Then we can see on the right hand side of this, so it's a very usual order book system. So here is the order book. In the middle, this is the mid price for the Bitcoin US dollar trading pair. If you want to go ahead and buy some Bitcoin, these are the prices. This right here is the best offer. So that is the price you'd have to pay if you want to go ahead and buy Bitcoin straight away. If you want to sell it, that's this price down here. So these are the best two. This is the best bid. This is the best offer, or called the ask if you're in the States. And then you can just see recent trades going through right here. What we want to do now is actually go ahead and trade. And there's really two main ways you can trade. Like I just said, either just buying or selling very simply. That's called a market order. Or you can input a limit order where you actually choose the price that you pay. So on the right hand side, we can see that this is the screen that you'll need to input your orders. So firstly, we'll just come to market order. With a market order, you don't choose the price that you pay, but you choose the amount that you buy or sell. So I'm just going to choose buy. Then come to market. You can see the available balance here. I don't have any USDT in this account, unfortunately, but it doesn't matter. The order value is the most important. So, how much do you want to spend? How much US dollar tether do you want to spend to get Bitcoin? Let's put 100 in here. You cannot choose the price that you pay. Just click on buy BTC and it's that simple. Now, what will happen is that the system will basically come over to the best offer and lift that offer, because this is someone selling Bitcoin saying, hey, if you want to buy a Bitcoin, you can buy it off me at 51,022. So the system will come in, you won't choose the price that you pay, and it will lift whatever the best offer at the time is. When you press this button, that is the price that you'll pay. The benefit of this is that it's quick and easy. The downside of this is that you might pay a little bit more than you could do. So the other way of doing things is a limit order. So when you come in, you have the order price right here. You can see I can actually choose the price that I'm going to pay. Now, what I can do now is come down here and say, actually, I don't want to pay 51,032. I want to pay 51,021. Little bit cheaper. And I hope that the market price will come down a little bit and actually fill my order. So what we're going to do is come over to order price, and I'm going to put 51,020. And I can see that down here on the left-hand side, that's what other people are bidding as well. So I'm pretty good with that. How much Bitcoin do you want to buy at this price? So I can put 0.02. Let's put 0.02. So that's about $100 worth. So you can see that calculation down here, so you know how much you're spending. And then click buy BTC. Now what's going to happen is that a limit order will be placed right down here. Now, if your price is below the current market price, you will not trade straight away. You're going to have to wait for the price to come down and actually hit your bid. What's going to happen when you press buy BTC is that down here on the left-hand side, you can actually see current orders. So we'll go down here, current orders right here. And if you have an order that hasn't traded yet, your limit and market orders won't show, but your limit order will be right here, and it will say spot pair is Bitcoin US dollar tether, order type is limit, direction is buy, order value about $100, order price, the price that we put in. So that's essentially saying, hey, your limit order is in the system and we're going to work it for you. If the price comes and hits your bid, that's great. You can see some past orders that I've done right here. Exactly the same. Spot pair, Bitcoin, US dollar tether, limit order by the amount or value and the average fill price. So all of your past orders and trade history are right here for you. That's really it. Trading in the spot market, it's the exact opposite for sell. Limits and market orders, you can get pretty much everything done with those. A lot of people use Bybit for trading futures as well, where you can leverage up. Definitely for more advanced traders, if you're a beginner, maybe just have a look at this. I'm going to explain this simply so you know how to navigate the system. If you want to know more about trading futures really in depth, look at the specific playlists on my channel and you should be able to learn a lot more about that. But come to your account, come to the derivatives account right here. You can see I've got some equity in here that we're going to need. Come up to derivatives. And then there's three different ways. There's USDT perpetual, there's inverse perpetual, and there's inverse futures. We're going to concentrate on USD perps right here. USDT perps is where you use US dollar tether as your collateral. So it's very different. When you trade futures, you're not trading spot. You're not trading cash settled. You're trading a contract for the difference in the price when you go long and when you sell, when you buy and sell. So USDT perpetual means that you're using US dollars to fund the borrowing in your account. Inverse perpetual on Bybit means that you're actually using the coin itself as collateral. So you can use Bitcoin as collateral, you can use ETH, and you can use these as collateral. We're gonna just do US dollar tether to make it simple, and the Bitcoin perpetual future. You're not buying and holding any cryptocurrency. This is a synthetic contract. Essentially, you just go long and you go short. The benefit of futures is that you can actually go short. So all you're doing here is betting on the price movement going up or down. And then when you close out your position, you will either close it out for the difference in profit or the difference in loss. So one of the big differences is that you have to use margin with futures. So what we can do, this is exactly the same screen, but up in the top right, you can see the big difference here is that you can use leverage. So we're going to click on cross right here, and you can see you can set up the leverage in two different ways. You can have cross margin or isolated margin. Cross margin is when, let's say you have $10,000 of USD on account and you want to open a long position in Bitcoin, you want to open another long position in Ethereum. You have to fund those positions and they may go up or down. If they go down, then what that means is that each position going up or down is going to use the total amount of collateral that you have on your entire account, so that 10,000. When you choose an isolated position, it means that you have to fund each individual position individually. So maybe you have an open position in Bitcoin and one in Ethereum. Maybe you want to put $5,000 to fund the position of Bitcoin and $5,000 to fund the position in Ethereum. What that means is that if one goes south and you lose money, the other one isn't affected. For most people, isolated margin is going to be a little bit safer just in case one of your positions kind of goes a bit south and the other ones aren't affected, right? With leverage here, do not use too much leverage. It really is going to wreck you if the market moves against you, which can easily happen. So I'm not going to give any advice here on using leverage. Everyone can do their own thing and make their own choices with using leverage for sure. But you can choose this. You can choose isolated or cross and all of this. Click confirm and that will be done for you. So the other thing to watch out for with futures is funding rates. Something that you will not get in the spot market. You can see the funding rate right here. The funding rate, because we're trading futures, we're actually trading contracts, and the futures market is different than the spot market and the prices have to remain the same. When you go long, what you're actually doing is borrowing money from short sellers. So if you go long, you have to obviously have a short seller to take the other side of your bet. If you go long, you pay funding. If you go short, you receive funding from those longs. This is the funding rate right here, and you can see that the current funding rate is 0.01%. Now, really important is that this happens every 8 hours, and basically longs pay shorts every 8 hours. You can see the current rate is 0.01 every 8 hours, which means a daily rate of 0.03. If we actually times that by days, so the yearly percentage or APY that you're paying to go long is, I've worked out, at around 11%. So if you want to go long Bitcoin, then you can do that, but you're paying about 11% as an interest rate to borrow the money and go long. So that has to be factored into your trading. You need to make at least 10% to actually borrow that. If you're leveraging up, then actually those percentages aren't a great deal, but definitely something to consider when you're trading futures. The other thing that's different about futures is something called the mark price, and you have to look at this very carefully. The mark price is the thing that the system will use for all of the different contracts. It's different from the actual market price. So as an example, let's say you go long Bitcoin at 55,000 and you have a stop loss at 51,000. Okay, so the price comes down, it moves against you, you're making a loss, and you have a stop loss in there. Let's say you're using leverage, and it says, hey, you don't have enough leverage on account, you're making a loss, we're going to have to kind of close your position for you. They're going to use the mark price for this, not the market price. They're slightly different, and so this is really the important price right here. You can see the mark price is derived by an index price and funding rate. This reflects the fair market price. So this is the price that will be used to mark all of the contracts that you have. So very important, that's the price that will decide and determine whether or not you get stopped out or anything like that. Another big difference of futures is that you can go long and short. You can't do that in the spot market. You can sell crypto that you already own and sell it to zero, but in futures, you can go short without any existing position. So let's come over and see how we do this. We have limit and market order, the same as in the spot market. And then what you can do is either just bet long, so bet on a rising price, or bet on a falling price. You can do that. So let's put a limit order in here. So the order price, we can have 51,000, and that is below the current market price. So we'd put a bid in here. Quantity, how much Bitcoin do you actually want to go long? So that'd be about $100 tether, you can see right here. What you can do is buy long with a take profit and stop loss. This mitigates your risk. A stop loss will mitigate your risk to the downside, and you can put that in yourself. So what we'll do is just do this, and you can see the take profit here. That will be above, if you're going long, that will be above the price. So let's say 53,000. And then the stop loss, well, if I'm getting in at 51,000, maybe my stop loss can be, let's say, 49,000. Okay, so what that will do is essentially bracket my order right here. So on the system, let's say I'll come in at 51. I will take a profit if it moves up automatically. And if it moves down, then I'll sell out automatically and make that loss. It just mitigates your risk. You don't have to put those in, but it mitigates your risk. So it's something that traders, especially with futures, will do. Another way that you can actually see what your risk is before entering any trade is by using the Bybit calculator. So you can come up to the right-hand side, and it's this little option right here. And what you can do is choose all of the parameters. So let's say I want to use 3 times leverage, and I want to go in for 0.002 Bitcoin. My entry price is 51,000, and the close price, let's say, we make a loss, 50,000. You can actually see right here. So the initial margin that you need is $34. So even though your position is probably, $200 or $100, you don't need all of that because you're using leverage. So they're lending you money to get a bigger position than you can otherwise have. If you actually make a loss of 1.96%, you can see the return on investment is actually 5.88 in the red. Because you're using leverage, your position is much bigger than your actual position. You're using leverage. Losses are amplified, and so are wins. Like I said, if you want to know way more about trading futures and all the ins and outs of that, I'll leave the playlist and some videos in the description. But I want to come over to the ByFi account now. So if you want to just buy cryptocurrency, hold it, and then earn some passive income on that, you can do it in ByFi. You can see my equity right here. So I've got some money in here. I'm trading, or I have ETH on account, and I have some Bitcoin and US dollar coin on account. You can see the amount I have. Total yield and daily yields will come up here. I literally just transferred in some crypto, so it won't show up. We'll come to the ByFi Center, click Overview, and there's a few different things. So flexible staking is literally just lending out your cryptocurrency onto the platform and other platforms, and they just pay you an interest rate every year. So if you have Bitcoin, currently 1.5%, and then USDC is 8.88%. So that's why I have some USDC in here. You can click Get Started. And all you have to do is get some USDT onto your ByFi account. So what you can do is press transfer. It'll go back to your account. You can see you can just transfer from your spot account, for example, put that into your ByFi account, how much you want, press confirm on that. And then that will transfer that into your ByFi account. Then you can click max. Let's say you have 100 in here, click stake now. It's instant, and you'll start earning, at the moment, 8.88%, and you're lending that out. That's really the basics of Bybit though. It is a growing ecosystem, and it's got very cheap fees and no KYC for now. I'll leave the link in the description. If you want to go and sign up straight away, just have a play or start getting some crypto on the platform. Other helpful videos are all listed down in the description as well. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.